Welcome everyone to the Moneycontrol live stream. You're watching the opening bell. I'm your new host, Nykaa. Clearly, some caution is expected to continue in the fresh week inflation data, and 1,500 corporates would be reporting their numbers this week. S&P 500 ended last week lower with a cut of more than 1%. SGX Nifty futures indicate a flattish to negative start coming for Indian equities. Asian shares decline in early trade. FIIs were net buyers of rupees 1,458 crore in cash segment, and DIIs were net sellers to a tune of around 291 crore in cash segment. The charter for the day, market today is expected to first react to monthly industrial output data. IIP data has slowed down to 4.3% from 7.3% in November 2022. Adani Group continues to be in focus due to incremental news flow. And of course, new age companies to remain in spotlight. In key earnings, we'd be watching out for Nykaa, which is expected to be in focus ahead of quarterly earnings. Z Entertainment, Power Finance Corporation, SAIL, Wocard, Bajaj Hindustan Sugar, Sri Renuka Sugars, BF Utilities, BGR Energy System, Campus Activewear, Castrol and Godrej would be reporting in their numbers too. Well, let us get going and discuss some stocks and strategies today with Mayuresh Joshi, the equity research head at William O'Neill Company. Mayuresh, good morning there.
Morning, Nikki. Pleasure to be on your show.
All right, I'm going to start off by asking about the slew of macroeconomic data which is slated for this week. What are the levels for Nifty and Bank Nifty now that you're looking at?
So as you pointed out, I think inflation data is expected to come in for the US tomorrow. We will react to that on Wednesday and our own CPI data today itself. So on the O'Neill lens, obviously I think the key moving averages, which is the 21 and the 50-day moving average, become extremely critical. And therefore, Nifty's level of 17,983 is extremely important, which is the 10-week moving average. At the same time, if you're probably looking at the downside supports for Nifty, 17,750, and obviously I think 17,353, the budget low that we created, it shouldn't breach that because from a rally attempt on the O'Neill lens will come back to a downtrend, and the Nifty is very, very close at those levels at its 200-day moving average as well. For the Bank Nifty itself, I think the kind of moves that we've probably seen specifically post the result season, reasonable move, but it needs to take out 41,650, which is its 21-day moving average, and 42,450, which is its 50-day moving average, to have a sustained move going forward.
All right, Mayuresh, I'm going to quickly address the stocks on our radar, and you can pick and choose from the stocks from the list. And you can pick the stocks which are attractive, upside or downside, either side. So I'm going to start off with the list right now. First on the list, we have M&M, where we're seeing a downgrade coming in from CLSA to outperform from buy, target price of around 1,538 per share. Of course, the numbers have been below expectation, and there has been expected EBIT margin. Automotive business continues to perform well overall for the company, but the volume growth for both SUVs and tractor business is something that has been watched out for. The downgrade has come in on account of the sharp run up on YTD basis. Another one that we have on our counter is Lupin, where, MOSL has downgraded the stock, and the target price is to an extent of 610 per share. It says that it's an expensive valuation coming in on that one, factoring in the earning upside from niche products. It values the PE at around, 22 times to arrive at the target price. And it says that it's dependent on few niche approvals coming in, like G Spiriva, which is going to be aiding in the EBITDA growth of around 900 crore in FY24 as per the brokerage estimate. It's also slashed in, it's cut down the EPS estimate for FY23, 24, 25, all the 3 years by 41%, 6% and 5% respectively. Of course, Adani Group companies, they continue to be in focus out there. Moody's has downgraded the outlook for at least 4 odd companies, and it's affirmed the rating for 8 of them, but then the outlook has been clearly downgraded and it's changed to negative from stable. These companies are Adani Green Energy Restricted, Adani Transmission, and Adani Electricity. These are few of them that is there on our list, and of course there have been a couple of reports coming in on Adani as well, which where NSE has removed the Adani ports overall from the surveillance list. But Mayuresh, I'm going to quickly toss into you and ask you about, out of the 3 stocks that we've, read across, what do you think makes more sense in this list right now?
Lupin looks very soft, Nikki. I think the numbers were very, very soft. The management commentary where pricing pressures are still expected to continue. Fewer launches because the specialty pipeline is pretty restricted compared to the rest of the pack at this point of time. FDA concerns on a few plants continue, and therefore the overall earnings trajectory for Lupin might get constrained over the next few quarters. On the O'Neill ratings as well, I think it's appearing very, very weak. So yeah, I think Lupin might be a soft stock when it comes to the treatment.
All right, then looks like we're up for the market open right now, and we're seeing some amount of flatness coming in for Nifty, right? We're seeing, almost 0.04%. That's like nothing sort of number coming in on Nifty 50. Clearly, it's a flattish start coming in for Nifty 50 index. If you can quickly pull out the chart for Sensex and see how the numbers are stacking up, that's going to be some numbers that we're going to be looking at. Almost a flattish start coming in on that one as well. We're seeing the screen completely showing a flat kind of show here. Nifty Bank Index overall, let's look at the chart there. What are the numbers looking like? Clearly, we're seeing some amount of a little bit positive bias there. But overall, as you can see, it looks like a nothing sort of a start coming in for the markets, at least from the start of the fresh week. Well, also, let's look at the top sectoral gainers that we have. We can look at something like a Nifty IT index, which is coming in, or for that matter, Nifty Auto Index, where to see how that, the index overall is stacking up. It's almost 0.50% gone on Nifty 50, Nifty IT index, beg your pardon. And Auto Index, on the other hand, is seeing some amount of traction being built in. But in slew of other earnings, I really wanted to also discuss the numbers coming in by these new age companies, right? We're seeing PB Fintech, which has reported a net loss of around 87 odd crore as compared to a loss of around 298 crore, which means that loss has narrowed substantially. Also, Mayuresh, I'm going to quickly come back to you and I'm going to ask you about these numbers of, all the new age companies. But what are you making of the market open right now?
So I think on expected lines, because the market would like to ideally see how the inflation data for India pans out today evening and what the inflation data for the US comes tomorrow evening as well. So I think some exponential reaction will only come on Wednesday as far as the markets are concerned. When it comes to new age companies, obviously I think the bellwether for the stock has been Paytm. The numbers specifically on the EBIT front, adjusting for its ESOP cost, seems encouraging at this point of time. Zomato, as they posted their numbers as well, their food delivery business has started delivering at least an EBIT positive number. Hyperpure still struggling, Blinkit still struggling. Expectations of other numbers, including Nykaa, expected to come today. But a majority of these companies, Nikki, either are in losses at this point of time, or the expectations in terms of the narrowing of losses is probably keep creating a huge sentimental impact that at some point of time they might turn profitable. Now, at what point, nobody really knows. Paytm is probably given a target of September, so by the end of Q2 this financial year, maybe they are on track to probably deliver that. Other companies are probably reacting in a positive sense, assuming that they might go the Paytm way in terms of at least management commentary reflecting positive numbers coming through in the next few quarters, of the balance sheets itself turning positive. But it's a large unknown of when and what timelines that entire process might take place, and whether it might happen for the bunch of these companies put together as well. So I think I'm being very, very selective out here. In fact, very, very careful not to probably dabble at this point of time. Let's wait for numbers to probably show some respite on the balance sheet and maintain that for a quarter to probably give us that confidence that the re-rating has genuinely come to points.
Well, point well taken, Mayuresh, but I'd like to chat about Nykaa also. Mayuresh, we've seen significant, Nykaa is expected to report in numbers, and also delivery over the weekend had also reported numbers. So we're seeing slew of new age companies now started to build in some amount of traction clearly. What do you make out of it, and what are you expecting out of Nykaa and the levels that the viewers can watch out for ahead of the earnings?
No, so I think it's got beaten down to an extent where the entire valuation premium at the time of listing has fizzled off quite significantly. The other aspect in terms of the profitability of Nykaa, yes, compared to the other platform stroke new age companies, Nykaa at least has something on the bottom line as well. But to peg that in terms of how this bottom line will grow exponentially going forward becomes a little bit of an ask. One element in terms of all these companies, the gross order value is an example for companies like Zomato, or the transaction value for companies like Paytm, or even Policy Bazaar to a certain extent. I think that might show certain elements of increase as well. But I think the operating costs to run these enterprises are pretty high at this point of time, which probably means that the EBIT itself becomes constrained to a large extent, even with the assumptions of a reasonable amount of top-line growth. So I think it becomes very difficult to peg a reasonable amount of valuation numbers, even on forward multiples. And therefore, I think these stocks are seeing some element of traction, as I said, because of the Paytm commentary, the delivery of Paytm numbers, and the sentimental effect that most of these companies will do well. So I think within this bunch, Nikki, one or two stocks might deliver good numbers in a consistent manner, but most of them might probably just fall short of investor expectations. We're not expecting a great set from Nykaa, but it's already struggled significant enough in terms of price damage. Expecting the stock to move probably in a very, very tight range, even post numbers, maybe 140, 145 on the downside, 170, 175 on the higher end of the range.
All right, clearly no fireworks coming in for Nykaa, at least from the levels that we have been talking about. But let's talk about delivery, because that company has reported an EBITDA loss as compared to an EBITDA profit over the weekend. Of course, the numbers have come out. What do you make out of it, and do you see some amount of traction building in on this one?
I mean, very frankly, Nikki, I think if you look at the numbers again, no confidence at all. And one of the statements that have come is that we will become profitable at some point of time. So I think at some point of time has no definition as far as the stock markets are concerned. I think you need some definitive action in terms of deliverables actually being met, or something happening on the balance sheet which probably indicates that things are turning, or the tide is probably changing. Very, very soft at this point of time. So I think maybe the stock is going to underperform the broader markets.
All right, clearly not some, negative commentary coming in on even that one. Nothing much to be expected out of Nykaa and delivery, going by what Mayuresh said. But Mayuresh, thank you so much for taking on the time and joining us. It was indeed a pleasure having you with us. With this, it's a wrap. Thank you so much for watching. Please post your feedback for us in the comment section below, and follow us on the link at the bottom of your screen for the rest of the updates. Stay tuned to moneycontrol.com and Moneycontrol app.